Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 20th of November. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Nvidia's earnings beat estimates as the AI chip giant delivers a bullish forecast, easing market fears over soaring tech valuations.
US President Donald Trump signs a law to compel the Justice Department to release the Epstein files in a stunning about-face.
Plus, a 9-month Bloomberg investigation finds Oxford University has repeatedly been slow to act against male academics accused of sexual misconduct and inappropriate behaviour.
Let's start with a roundup of our top stories.
Global stocks have been boosted after Nvidia delivered a robust revenue forecast, easing worries about a potential AI bubble. Shares in the artificial intelligence chip giant surged by 5% in post-market trading on Wall Street, as Nvidia said it expects sales of about $65 billion in the 3 months to the end of January. That's roughly $3 billion more than analysts had predicted. The world's most valuable company also reported third quarter results that topped analysts' estimates, with revenue up 62% to $57 billion. Nvidia's CEO Jensen Huang spoke exclusively to Bloomberg.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Nvidia's CEO referring there to Blackwell, the company's most advanced chip, and its upcoming upgrade, Vera Rubin. Jensen Huang said last month that the company expects over $500 billion in revenue in the coming quarters. Yesterday, the CFO suggested they may surpass that target.
Now, US President Donald Trump has signed legislation requiring the release of all files related to convicted sex offender Jeffrey Epstein. It follows a months-long attempt to block the measure by the president in a fight that raised tensions within the Republican Party. The bill passed by 427-1 votes in the House. Speaking ahead of its signing, Bloomberg contributor and former Republican strategist Rick Davis from Stone Court Capital predicted further controversy.
When these documents come out and with all the search capability you have, we're going to learn a lot of new things. And if it's not clear what it is, the Department of Justice and the Trump administration is going to come under withering pressure to clarify things that are maybe redacted and or not ultimately produced.
Stone Court Capital's Rick Davis speaking there. The decision inflicts another political setback on the president just 2 weeks after his party suffered defeats in state and local elections. Only 4 in 10 Republicans approve of Trump's handling of the Epstein files, according to a poll from Reuters Ipsos in October.
China is considering new measures to revitalise its struggling property market amid growing concerns about financial stability. The options being floated include new buyer mortgage subsidies, raising income tax rebates for homeowners and lowering some transaction costs. Our chief North Asia correspondent Stephen Engel says the stalling market poses a serious problem.
The property woes is now into its fourth, or well past its fourth year, into its fifth year, really. And it is at the heart of all the big issues in the Chinese economy, whether it's persistent deflation, lack of consumption. It is all tied to, of course, households feeling their wealth effect has deteriorated over the last half decade.
That's Bloomberg's Stephen Engel. The plan is intended to lure back home buyers who've been reluctant to enter the market, with the average mortgage rate for buyers' first homes in 42 big cities hovering just above 3% in recent months.
Minutes from the Federal Reserve's October meeting reveal that many officials said it was appropriate to keep interest rates steady for the rest of the year. The record published yesterday showed that several policymakers were against lowering the Fed's benchmark rate. Here is Bloomberg's Mike McKee.
Some thought that inflation was going to rise too high. Some thought that unemployment rise too high, and nobody could agree on what to do at the December meeting. In general, they agreed that inflation had moved up, the economy was expanding at a moderate pace, and the unemployment rate remained low. But they did not agree on the outlook.
Bloomberg's Mike McKee there. It comes as the Bureau of Labour Statistics cancelled its October jobs report due to the record-long government shutdown in the US. Instead, it's incorporating those figures into its November report set to be published after the Fed's final meeting of the year. Today's September non-farm payrolls figures could be the last piece of big data that the Fed sees before that decision, which is on the 10th of December. Odds of a December cut fell markedly yesterday, with traders pricing just a 25% chance, down from 50% earlier this week.
Senior Pentagon officials have arrived in Ukraine to discuss efforts to end the war with Russia in a meeting with President Vladimir Zelensky. It comes as an unofficial US-Russian proposal modelled on the Gaza ceasefire received a tepid reception from Ukraine's supporters. Neither Washington nor Moscow have officially confirmed the plan, which is said to feature major concessions from Ukraine. Meanwhile, EU foreign ministers will meet today in Brussels to look at further measures against Russia's shadow fleet of tankers transporting oil.
The British Retail Consortium says that UK consumer confidence tumbled in November after government hints about higher taxes, which caused people to worry about their own personal finances. Bloomberg's Ewan Potts has more.
The BRC's measure of UK consumer confidence slumped in November to minus 44, the worst reading since April, following what its CEO called a tumultuous month of budget speculation. Almost 60% of Britons expect the economy to worsen over the next 3 months, with only about 1 in 7 expecting a pickup. With less than a week until the budget, the Chancellor will be hoping that yesterday's lower inflation print fills consumers with at least a little bit of Christmas cheer. In London, I'm Ewan Potts, Bloomberg Radio.
Those are your top stories on the markets this hour. The MSCI Asia Pacific Index 1.1% higher. The Nikkei in Tokyo is up by 2.7%. The Kospi 2.3% higher. European stock futures also pointing to a strong open, up 0.9 for Eurostoxx 50 at the moment. Nasdaq futures 1.8% higher. S&P E-minis up by 1.3%.
Now, in a moment, we're going to bring you more on Nvidia's strong growth forecast, plus a Bloomberg investigation into harassment concerns at Oxford University.
But another story we've been reading this morning is about the luxury sector, and apparently the era of quiet luxury is over and we're now in the era of private luxury. Which is sad because I so much enjoyed saying shh, quiet luxury for such a long time. But this is according to an interview with the CEO of the fashion brand Berluti, who's been speaking to our colleague Chris Rovzar. Now, this is a relatively small brand under the LVMH empire. They're best known as a shoemaker and leather goods brand, and they don't have plans to expand beyond that. And that, the CEO says, is part of this concept of private luxury. He says that shoppers now want things that are distinctive or rare rather than the trending item that, you know, everyone's talking about and everyone has. And also Chris has been delving into some of his insights into the renewed focus on quality from luxury shoppers as well. Just because the sector has exploded and more people are spending on luxury items doesn't mean that people don't want them to be very good quality as well. And the McKinsey have actually published reports on this saying that, you know, luxury is kind of weakening some of its craftsmanship elements by the fact that so much more money has gone into the sector as well. It's an interesting insight into essentially, you know, this idea of keeping it small still being, you know, something that a leading luxury brand can do.
Yeah, I think this is finally the luxury that I get, quality, authenticity, and not everyone knows about it. And Berluti, obviously, they have this kind of ombre style of leather that is very beautiful. I get it. It's very aspirational. Thousands of dollars just for a leather jacket. But it's not just Berluti that is taking this on, as Chris is sort of saying. It is a bit of a trend because he also spoke to the Van Cleef and Arpels CEO, and also they don't want to expand, because the other thing is they don't want to expand beyond the thing that they do very, very well. But yes, maybe the
just
price
like
tag
us, Caroline. That's why this podcast is so short. We just like to keep it, you know, short and sweet. So perhaps we too are considering ourselves private luxury. We'll think about that. Let's bring you more, though, on our top story this morning and the results from Nvidia that are helping to dispel some of the fears that the AI industry is in a bubble. Joining us to discuss, Matt Bloxham, senior analyst at Bloomberg Intelligence. Matt, good morning. Let's start then with the forecast, which is a big focus for markets from Nvidia. How bullish was it?
Moderately bullish, I would say. So the market was looking in their Q4 to be about 62 billion of sales, As you said earlier, that they're guiding to 65 billion plus or minus 2%. So that would be a beat of anywhere between 3 and 7%. So it's decent, but it's not, kind of a crazy upside. And I think probably most people, if you kind of push them, said, really, you were probably thinking that they would do more than that 62 billion, weren't you? I think the answer would be yes, because, there is so much investment going into this market from the big hyperscalers like Google and Amazon and Meta. So, I think it's, encouraging, but, I don't think it kind of really changes the overall picture that people had in their heads.
Okay, I like that very calm assessment of what Nvidia are doing. Look, one of the key questions in the report was what the company expects from its China business as the US government is restricting the shipment, we know, of the advanced chips there. Just want you to listen into what the CEO Jensen Huang told Bloomberg's Ed Ludlow in our exclusive interview about that. Have a listen.
Nvidia's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
Okay, so assuming 0, Matt, how important is China then to Nvidia's growth, if not now, sometime in the future?
Yeah, I mean, it used to be quite a big part of their business, probably 15 to 20% of the revenues. I think, what he says is a very appropriate assumption to have, that, China's going to be 0 of their business going forward. I think, if you compare the past to the future, historically, the issue was mainly about US government restrictions. Obviously, those restrictions are still there, and there are lots of different dynamics in that. I think going forward, it's increasingly a competitive issue too, because the likes of Huawei are catching up. Their technology is still behind, but the gap is closing, and the Chinese government is encouraging Chinese firms to use Chinese technology. So I think even if the US restrictions are lifted, a lot of Chinese companies, either because they see better technology, homegrown technology, or because they're listening to the government, are simply not going to want to buy Nvidia chips.
And something to keep an eye on the story, as well as our latest reporting that White House officials are urging members of Congress to reject a measure that would limit Nvidia's ability to sell AI chips to China or other adversary nations. That's something to keep an eye on as that legislative process is underway as well. But Matt, the big picture from these results, do they dispel the fears of an AI bubble, or will we keep asking this question every quarter until growth starts to slow down?
I think we're going to keep asking that question. I think 2026 is probably the turning point, because we've got very clear indications from their major customers, which is still the hyperscalers, that their big investment surge is going to continue. So that's where this kind of $500 billion of kind of forward demand that Nvidia talk about is coming from. The turning point comes when, right now those big hyperscalers are investing for current and also anticipated demand from their big enterprise customers. Enterprise customers are still at a very early stage of evaluating AI and how it's going to transform their businesses. If they come to the conclusion that actually the return on that investment isn't so exciting as they thought, and their natural demand kind of starts to wane, then the hyperscalers are going to take their foot off the investment pedal. That's going to affect Nvidia. That's not going to happen for quite a few quarters to come. So I think whilst that kind of plays out, we're still going to have these kind of questions. And I think a lot of the focus is going to turn to what big corporates are doing, and I think their quarterly results, people will be asking, what's your investment in AI? How's it working out for you? What's the return on investment? Because that's ultimately what's going to dispel the bubble issue.
Okay, Matt, great to have you with us. Thanks for your analysis this morning. Matt Bloxham there, Senior Analyst at Bloomberg Intelligence.
Stay with us. More from Bloomberg Daybreak Europe coming up after this. Well, now to a special Bloomberg investigation. The University of Oxford has repeatedly been slow to act against male academics accused of sexual misconduct and inappropriate behaviour, including alleged rapes, bullying and predatory behaviour towards more junior female staff and students. That's according to a 9-month investigation by Bloomberg's Catherine Griffiths, based on documents and interviews with almost 50 people. Well, I sat down with Catherine to discuss her exclusive reporting, and firstly she began by telling me what she's uncovered.
We have found lots and lots of women have come forward as part of our investigation. Some of them have been very kind of emotional and found it quite difficult to speak about things that have happened to them. Others, it hasn't necessarily had a huge individual toll, but have come forward to talk about what they have experienced and what some of people they know have experienced. And those accounts have varied from some very, very serious things like people who have said they have been raped by individuals while at Oxford University, to people who have been assaulted, to people who feel that it's best described as sexual harassment. And it's a lot of different types of experiences of things that have happened, but then also the way when some of these people have tried to come forward with those experiences, have had some really difficult times dealing with the university and trying to get the university to hold individuals to account.
How has the university responded when you've put your reporting, including the serious allegations, to them?
So Oxford has given us an on-the-record statement, and they have said, "Sexual harassment has no place at Oxford. Our sympathies and thoughts are with anyone who has experienced harassment or misconduct. We strive to ensure that Oxford is always a safe space for all students and staff. We take concerns seriously, applying robust procedures. Support for those affected is a priority, and we take precautionary and/or disciplinary action where justified. We reject any suggestion that the university tolerates harassment or puts reputation before people's safety. While we cannot comment on individual cases, we are committed to continuous improvement and have strengthened our approach over recent years. Our single comprehensive source of information sets out our approach, support and training. We encourage anyone who has a concern to raise it."
OK, so that's the full Oxford University response. Do you think that Oxford University is worse than other institutions?
So I think it has shown itself to be worse in quite a few different ways. It's quite a complicated question because different universities do things in slightly different ways. And Oxford has certainly brought in changes over time, as indeed have other universities and, of course, other institutions. But I think both in terms of the actual procedures and rules and also, crucially, in terms of how they are implemented and people's attitudes, Oxford does have a problem that women who are there today feel it is not really wanting to deal with properly.
What are the problems with universities in general?
So universities have some really, really big challenges in this kind of area. And those are the clear power imbalances that exist between tutors, professors and their students and their junior academics, which can make it really, really hard for people, whether it's sexual harassment or other problems, to bring a challenge to their tutors or their senior colleagues. And we see that both in terms of, for example, people doing, say, a PhD where their supervisor is so crucial to the success of that PhD and their further career that they really don't feel they can kind of bring a challenge to those people. And for junior academics, it can be as bad, if not worse, a problem because people are very early on in their careers. They're very, very dependent on people who can be very senior and powerful in their sectors, not just in a direct relationship they may have in terms of that an employment relationship they may have, but also more widely, a senior person may be well known throughout the sector and may therefore play quite a big part in whether that younger junior person is able to flourish in their chosen career.
Do you think there has been any change? Your reporting is both about things recently, but also quite historic.
So I think at Oxford there has been some change. For example, they brought in a new policy in September this year dealing mainly with problems that students may have. But actually what really is quite striking is talking to people going back, say, 20, 25 years up until the present day. There have been several moments where people thought finally it was a real crisis that had kind of risen to a level of consciousness that would force a stronger set of changes. There was, for example, an incredibly sad example of a young woman committing suicide in 2013 that people thought at the time would lead to Oxford introducing stronger processes for dealing with senior academics. More recently, in the last few years, there was some reporting by Al Jazeera about certain professors at Oxford University that women at Oxford at the time also thought would lead to big changes. Some of those people talking to us now say how disappointed they feel that does not seem to have led to change.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.